What's up, guys and gals? We've got Monday night, October 17th, and I am going to do a freestyle little chat here that I wanted to record and send out to folks because there's been a theme that has been persisting in my mind. And this is mixed with and backed up with data that I may or may not really get into too much, but because I'm just not prepared to list a lot of these things out in video format. But I think it'll add some value in the sense that um, I'm going to get into what I'm seeing in the market, macro really, and then drill it down to the two biggest opportunities that I see for investors, and also just hopefully, um, give you a perspective that might help some folks avoid mistakes, making moves that are going to be done out of, an emotional peak or capitulation that you'll regret later, because these are difficult markets and difficult times. So, one of the favorite, areas that I think I have a unique purview as well as instinct for interpreting, the area that I think is very valuable for me and my personal investments is dealing with market psychology, investor psychology. And, a lot of people call themselves contrarians. But the reason that I have a unique purview is because of all the people that I talk to that are investors, all of the messages that I get from, subscribers on different levels, people that I've gotten to know over, a decade or two that were clients of mine, actually over 2 decades ago when I was a broker. And new people as well, people that come on board and subscribe to the Gold Investment Letter, or I end up dialoguing from Twitter. They find me there or wherever it is, and just also professional investors. There's a lot of pros that are subscribers to the Gold Investment Letter and to my Elite Investments newsletter as well. And a lot of these are personal relationships where I just kind of point them somewhere to get my thoughts and my dialogue. And it's interesting because the institutional investors that we think are so spot on are just like retail. Frankly, I've found in my experience there's a minority percentage of people that make money consistently in these markets that have outsized returns. And it's hard for me with a lot of you to pinpoint the success or failure ratio or exact performance or even ballpark, performance when you write a newsletter. A lot of people see things at different times, different prices, take actions at different times based on whatever it could be. And, all I try to do is the best I can with when and why I go out with certain recommendations. I tend to put buy up to prices, on things because I find that there's a real problem. I mean, it's a big advantage, I think, for me and for those of you that may buy into this theory, which is that the majority is wrong, and there also are levels to sort of reading bearishness and fear. And one of the big ones that helps me to make decisions, like right now, I'm fully net either long, and there's no shorts on my books as of the last week or so. I ended up covering the last of even any shorts that I had on the books, which made a lot of money, particularly in the real estate area that I had called earlier in the year when I was going short. And how I was doing that, I really like there's the inverse ETFs, DRV and SRS. One of them is 2x inverse. The real estate index, which I believe it mimics RWR, which is the US market, and SRS, which is 2x inverse real estate. But instead of putting up all that capital to buy the actual ETFs, I mean, right now, DRV is like $70 a share. So, if you buy 1,000 shares of that, you do get the 3x juice versus, in the shorter term. Now, in the long term, you don't want to hold these inverse juiced up ETFs or even the regular long juiced up ETFs for long periods of time because they do diminish in value. But for a swing trade or for anything less than like 6 months, they can be very, very ideal, especially if you're comfortable with buying options on those names. And I closed the last of my DRV call options. Um, like they weren't the last ones because I had bought some back and it was around a 7 to 8x return on those, but I had booked 10x returns from when I was talking about initially going short these plays back in, I believe it was probably somewhere in May to June when I came back to consciousness. Um, I, I resurrected from the dead and I just started shorting real estate. That's what I did because I could see it, feel it, and some might have even been prior to when I went into the hospital. I don't remember exactly, but I did communicate, particularly with a couple of videos, as well as with certainly with premium and elite subscribers, that I was going short real estate to hedge a lot of the just general holdings that we had. And we were coming into the summer, we were in a rising rate environment. And, right now, the narrative that I see from it's just across the board. Everybody is bearish. Everybody. I mean, I had the privilege to go and travel again and go to another conference at the Precious Metals Summit in Beaver Creek. And one in particular of he's become a good friend and an elite member, very savvy individual that lives in Switzerland in the resource sector. He's very, very active in the space. And when I had called him after we both went through the different meetings with people, I said, "What'd you think? What'd you learn? What'd you take away?" He's like, "Everybody's bearish. Everybody, all the companies, all the fund managers. A lot of people didn't show up to the conference because the sector is sort of like, dead and really, I would argue, bombed out. When you're looking at plays like McEwen Mining, for example, this is just an example, but it's an important one where the stock is trading at the 3 to 3.5 level in the United States and has been split adjusted because it went through a 10-for-1 reverse split after it became basically a penny stock. But this is a large asset holding company and a producer of about 150,000 ounces of gold per year. There are not a lot of these, what I would call mid-tier gold producers at that level, and run by, Rob McEwen, who is really well known and well respected in the space for the things that he's done and the value he's created, even in bad markets back in the Gold Corp days through the 90s. I believe that his compound annual growth rate was around 29 to 30% through mostly, bearish environments, low price gold environments. And when he grew that company from 50 million to an $8 billion market cap over the course of, I think it was definitely over a decade, but not over two. So, a lot of people made a lot of money with him, but, he ran into some operational challenges at Mux and, they kind of lasted probably an extra quarter or two. There was random things that were going on, at their Black Fox complex. But, I always say with this particular opportunity, you're never going to see something like this, maybe ever again, where you've got a $3 stock, a CEO and chairman, founder who paid, for just that Muck stock, not the McEwen Copper, which he just put in $40 million of. It was around $180 million to get a now 17% stake in McEwen Mining, which means that he paid over $20 a share. And he's worked for 15 years on building this company for free, essentially. $1 a year is the salary he takes. Very underwater. I like to exploit things like this that are anomalies, perfect storms, if you will, and do the opposite of what everybody else is thinking. And what I'm seeing right now is this level of not only bearishness and pessimism, but also extreme apathy, meaning, people just aren't doing anything. If you're bullish, and you're hopeful for the longer term, people just aren't buying anything. They're not planting seeds in an environment when I think you have to be doing so. And I've been early, for example, like on my nickel calls, the nickel juniors. There's a number of them that I own that I think are terrific, very undervalued plays, that have built up really class one nickel assets and deposits that are trading for a song. And, nickel we have at $10 a pound, which is a pretty high number. There's never been a basing that I've seen. I don't think, nickel there's been one run that I saw, over 2 decades ago. I think it was that, nickel had a pop into the 20s and came right back down and went, down closer to like $3 or $4 or $5 a pound for, most of the last decade or two. And, so at $10 nickel, you've got a very profitable environment for producers. It's fruitful, and it is sticking. Nickel is sticking and it's going to stick because there's not enough metal. These are the things that I'm reminding myself that I wanted to bring up. There is not enough metal coming above ground to meet demand in even just simple add-on growth areas like electric vehicles, for example, going past 2024 or so. There are going to be a lot of folks that wake up in the next year or two ish that all of a sudden say, holy shit, we do not have any metal to build out our cars, or even in the industrial side of things, with this big slowdown across the globe in building and real estate and growth contracting and rising rates. This puts headwinds into everything, and I'm aware of that. The question is, at what point does that all look priced into the market, and perhaps even over priced into the market? The markets are forward-looking mechanisms. I learned this early on in my days as a broker, and I saw it over and over and over. When you have basically, it could be the stock market, it could be the gold market, it can be Bitcoin, it can be anything, bonds, whatever. They look out somewhere in the ballpark 6 to 9 months. I think is probably accurate. Maybe it's a year. I don't know. It's not an exact science, but I do know that, if you look, the market starts to see the future and act as if whatever is coming is coming. So you can't look at it today and look at the market and expect it to perform for what is happening even today, currently. It's certainly not in the recent past. The market is very smart machine that looks out into the future and anticipates different things. So the market will start to act. For example, the general markets will act very positive well before we see inflation numbers start to really cool, and then the Fed and some of the central banks basically saying, we're going to slow down raising these rates or pausing. Don't forget, we have a situation where, the globe is approaching like $400 trillion of debt, which includes all the governments, corporations and institutions, and households. That's a real number. I think the number is, I say around 400, approaching 400. So by year end, it's probably going to be right there at like $400 trillion of debt. You can't even wrap your head around what that means. It's like funny money at this point. There's no going back, is my point. The United States with on the books, you go to the debtclock.org and you can watch and see, that number. And I can't share a screen here on YouTube. I don't know how, at least. But let me see what that number actually is. You have a debtclock.org. I love this website. It's a real-time site that shows the various levels of debt and deficits that we've got here. Sorry, wrong one, debt clock. And, the national deficit is the first one. USDebtClock.org is the name of the site, actually. So the U.S. national debt, the page is loading, but it will give us the number. It's over $31 trillion, okay? That means that debt per citizen is up to $93,470, but the debt per taxpayer, and a more important number, is $247,000 $325. That's the debt you and I owe with the national debt and deficit vis-a-vis the government managing our tax dollars and funds. It's ridiculous. It's never going to be able to, you're not going to see, it's too far gone per a GDP number. When you put the national debt against GDP, anything historically, you're looking at it's too far gone. So what does this mean? This means that at some point we know that the Federal Reserve and other central banks are very likely not only going to pause rising rates, they're going to have to reverse course. So the question is, everybody sees right now. I mean, when I see headlines like I just saw today or yesterday, it was today. It was 100% chance in a consensus that they did 100% chance for a U.S. recession. Okay, 100%. Now that's on the table. 100% when they took this, vote and got the opinions of all kinds of different people that were managing money, that are in the real estate market, that are business owners, and now they're just putting headlines like this out there. So you have to ask yourself, how much of that is already priced in? I mean, the markets have been destroyed. I made 10x my money over the summer in shorting real estate. I mean, that play to me, I locked those numbers in. I got out of the last of those shorts right now. I would need to see at least a substantial rally in real estate and those inverse ETFs coming way back down, because I did sell some and buy some back in the summer once because they went up and I think I doubled or tripled my money. Took some off. It wasn't the whole position. And then they came all the way back down. And I said to myself, is the correction over? And I thought, no, so I went in and I put all that back on the books and then some as it got cheaper. And that really paid off nicely. And it helped with hedging the destruction of the unrealized losses that I have in, my various brokerage accounts like E-Trade, where the most of my holdings have become mining stocks, gold, nickel, silver. I have exposure to lithium. I have a lot of exposure to vanadium through Phenom Resources. These things are going to pay off mightily. And those of us that are involved in these plays, we kind of we know it's going to come back and even go to new highs in a lot of cases. These are cyclical markets, these commodity markets and precious metals markets, but we've actually also been getting our teeth kicked in for 2 years, in this space. It's been rough. It's been a lot of headwinds, and it's easy to get discouraged. But when I start to talk to people and every piece of feedback, I mean, one of the big nails in the coffin where I was like, I just have to get out of all my short exposure was last week talking to two of my brokers in Canada who, talking about the environment, what they're seeing in the market. They're bearish. They're big producers. They're smart guys, but brokers tend to be very wrong because they think too short term. And, that's just the nature of the beast and the business and a commission business and things like that. Some of the, I was a broker, so I'm not, poo-pooing them in general, but it's a good gauge when you have brokers, fund managers, and institutional pension fund managers, individual investors, high net worth investors, family offices, the whole enchilada are bearish, and this is a good example in crypto. I think, so what I'm saying is this is a buyer's market, and, people have such a difficult time buying anything in this environment that I just wanted to convey that the way that I got very wealthy was from, first of all, the seeds were planted and the foundation built in this mining sector from some big, big wins. A lot of failures too. Doesn't matter when you have something that goes up 30, 40, 50, 60x. And that happens repeatedly, at least on the 5 to 10x side, year after year in any market, you can make a lot of money. And so essentially that was there for me to play with and manage my money differently. This last time around into 2020 and 2021 and 22, Whereas, I saw what was coming, I think, pretty clearly, more clearly than most, that we were going to have a big run in crypto, going back right after the 2020 of March market COVID crash. And I was able to, make 8 different tokens, okay, that I locked in at least partial profits on of between 100x and 650 times my money. You do not need a lot of capital to be into plays that pay off 600 to 1. I mean, you're talking about 10 grand turning into 6 million in that case. It's like, it's crazy. It'll change your life if you have multiples of those, like I did lock in 2021, and then started to move those enormous paper profits that turned into realized profits over into more conservative vehicles. I bought, some property, real estate, but a lot of it went into physical gold, which I'm happy with. It's down a bit, but I'll take down on paper 8 to 12%. That's a real store of value with gold, since, like, for the last year when we were hitting highs in crypto, gold had a run, things had a run, the miners too. My physical gold being down 8 or 12%, something like that, a cost average with what I rolled a lot of those big wins into, I'm very happy with. And there's a lot of other interest bearing things that you can have exposure to in crypto, that are dollar based. And we're in a really good position if you're American right now because of the strength of the US dollar, which simply is not going to last forever, folks. Things are all going to change. And it's a matter of the timing and how it all plays out. But if you think you're playing it safe, I think that a lot of people that think that they're playing things safe are going to get smashed in the side of the head with a 2x4. Meaning things can get turned upside down in the bond market, and the U.S. dollar is going to, I think, I believe it's peaked. I believe the U.S. dollar has peaked. Okay, that's my call. And if that's true, and we start to see more weakness in the US dollar, which has really been very, very strong against other fiat currencies, and they're all going to zero. They've always all gone to zero. Any paper currency that's government backed by nothing becomes worthless. It's printed away. And that's where we're seeing this real inflation finally in the United States. I tell people in a simple manner, if you have 9% year over year inflation, your $100 1 year ago now buys exactly, and this is if you're following the government numbers and thinking that they're legit, which they're really not. The inflation number is actually higher. Definitely, it's just a matter of how much, but let's use their numbers and say it's 9% that was there most of the summer or close to it. If there's 9% year over year inflation, your $100 is worth what? $91 1 year later in purchasing power of the same goods and services. That's crazy when that happens, a couple few years in a row. And then you have these different spikes. I mean, we're getting a little bit of a taste of what people around the world in lesser economies and lesser developed economies and crooked, corrupt governments around the world do to their citizens regularly in places like Argentina and Venezuela, where you have to start over every 3-5 years because somebody comes in and just debases the currency is what it really comes down to. It's going to be no different here. That's what's occurring, and it's going to continue. There's no reversing these trends. So the question then becomes: can you be the person? Can I be the person? This is what I ask myself, because this is how I made those large returns. Unbelievable, life-changing returns in crypto was because every time the market crashed, I would put some money, and sometimes it was just a small amount, into those risky tokens that I liked a lot and was building, a portfolio effect plan and strategy towards, meaning I knew some of them would fail, but some would hit big. And I know how to do research, and I think have a pretty good, assessment of what can work and what won't work with high risk ventures. and earlier stage type of situations. But also, I was very disciplined in that I had automatic purchases going on in some of these different tokens and coins. And also, the main thing was to do that in Bitcoin and Ethereum themselves, keep chipping away. The longer that bear market from all of 2019 and 2018 is when it began, and that market peaked in January, rolled over, and then became a very bad, very nasty bear market. But this is the seventh time in crypto, for example, that we've seen on average an 80% hatcheting in the price of Bitcoin. 7 times this has happened since 2009. It's actually par for the course. It doesn't feel good going through it. And you think, oh, I could have sold it all at 60 some thousand. I'm lucky that I took actions, contrary actions, just like I'm telling you right now. It's the contrary actions against all of the media, all of your peers, having these discussions about, like, right now, everybody is focused on downside and risk. And I think, like crypto, for example, I don't know for sure, and I'll adjust and adapt if needed. But we're sticking this 19,000 area. I mean, it's just not breaking down yet. And if it doesn't break down, it means it's holding and it's basing. And we could have already seen the lows on that one flush into the high 17,000s on Bitcoin. I bring that up as an market example. It's also very appropriate when you have a conversation around gold and currencies and value and storing value and actually getting ahead in this crazy world. You've got to, take some risk if you want that to happen. And I think it's necessitous that people take on risk to stay ahead of the debasing of what's happening around the world. In Europe, Europeans, you've got it even tougher, I think, than the US, at least for now. And, that's the same case with most nations on the debasement speed of your currencies. But I can just tell you that there are times when I just have that sense where it's like things are overdone. Everybody is so bearish, and the headlines that I'm seeing being like so bearish, it feels like things are peaking where I want to put money to work. Not everything at once, but planting regular seeds and buying stock, particularly in our mining stocks. The juniors are going to see there's going to be a lot of these companies that go up, 5, 10, 20x. They're going to go up 2 to 3 times just from floating up because the selling has been completely exhausted. We're in the year-end tax selling season, which I don't think is going to last as long into December like it would if we had other asset classes where people had big profits, and we're going to hammer at any price mining stocks to take losses against those before the end of the year because we're down all over the place, right? I think this is actually one of those environments where the tax loss selling could be mitigated and actually end early, meaning probably soon, very soon. I don't know. We'll see. I'm watching. I'm not saying I won't adapt or that we can't go lower in the metals and mining, and that we can't see some sort of a black swan still. We're still in October when these things happen. But I just don't see the value in being short and being bearish. I'm putting money to work steadily, and I've got, very, very cheap stock in some companies that I know they'll survive. They have assets that have been worked on for long periods of time. Some of them, if you look at a lithium producer or like a lithium development stage company that has assets, the price of lithium is up, what, 500-600% this year? I mean, there's no reflection of that in the miners. That's not going to last, folks. There will be a shift. There will be capital that will start to find its way to these areas. And I think at the end of the day, he who owns a bunch of the metals in the ground is going to be the king. So keep that in mind. I just kind of wanted to get on here and let you guys know that I'm no longer short anything. And it doesn't mean that I'm all in long. I'm trying to secure, I keep some cash for repetitive, cost averaging and things like that, and to buy on if there are more pullbacks. But I'm pretty exposed, and I've been buying and accumulating a lot of these miners that I'm down. My favorites, my big ones, the McEwens, the Gigas, the Phenom Resources, which is my biggest position, and then Lux, and then Giga. I'm down on paper, probably an average with those three of at least 30%. So, anything you buy now, you could just look at it like I'm getting an Eric discount, from where he has a lot of my money in. And I know I'm going to be right eventually. It's just a question of timing. And can you hold on? Can you stick with this stuff? Do you have the stick to itiveness and the perseverance and the resolve to see it through to the other side? It's an excellent time to be buying junior mining stocks and crypto. If you don't have any crypto, and you never bought into it, fine. I'm just letting you know it's not going away. It is going to change everything about how we transmit value back and forth to each other. The growth and adoption that is happening on the networks, still usage, wallet adoption. These things are just, it's a hockey stick. It's, Newton's law, if you will. It's basically going to be a typical adoption cycle, just like we saw with the internet. And it's accelerating. And we're probably looking at somewhere around like 1998 levels of internet usage adoption in terms of crypto. And it's a different ballgame, but it's a bigger market. We're dealing with the financial system and money and value transfers. Everything is going to change, guys. Call it over the next, few years to decade. I think it's just everything's going to look so different. And, you might as well take some risk because the upside is there as well. The volatility is huge in crypto because we're still very early, but I think Bitcoin goes to either zero and this whole thing is done, or it's going to the millions per Bitcoin. That will happen. It's going to be one or the other. It's no middle ground. Keep that in mind because either the adoption continues and it keeps going up the scale in terms of the size of the money that is coming into it, which I see with my contacts and with the data that I look at, that has me very heartened to continue to accumulate. And then when it goes above 30,000, I'll turn off those auto accumulate, smaller pieces that I have in different accounts. And let it ride, let it sit until we get way up there and get a little bit more aggressive when we see that a bottom might have been carved out and then money is flowing in and the bottom is likely there. I'll put some more into work, and that goes for the miners too. But it's also a little too late, where if you don't do anything in a market environment like this, you're not going to do it. If it does go lower, you're going to say it's going to go lower than that. And you're never going to get anywhere near the bottom. Trying to pick bottoms is a loser's game. Same with trying to pick tops. Last thing I'll say is I love, like Frank Justra had always said, for market tops, when do selling is the hardest part of this game. It always has been and always will be. When do you sell? And, he said that when the ducks start quacking, feed the ducks, meaning the people, everybody has gold stocks, Bitcoin, whatever, these manias that kick into gear. And everybody likes it. Everybody's talking and the valuations get way out of whack. I just start feeding the ducks, feed the geese, or whatever you want to call it. And the same thing is the opposite right now, to plant seeds, to own shares in deep value for a lot of these different companies that I'm seeing. And you can choose the level of risk you want to take. The beautiful thing is that even the producers, the Newmonts of the world, the mid tiers, the Equinox, IM Golds, McEwen, go with those. If you want more liquidity and not necessarily the 50x upside, but I'm telling you, a lot of those stocks are going to triple easily in any whiff of a new bear or bull cycle. So I'm bullish. I think taking action now is imperative. If you want the big wins, if you want the big, monstrous, life-changing wins, you have to be taking action of buys right now in this mining market, and also for those of you that follow crypto. Have a good night.